Okay, welcome back everyone to the channel. This video is just going to be a quick overview of the steps that I took to pass my combine in 2 days and how you can do the same. So my combine reset was on the 14th. I made $1,500 or a little over on the 14th and then $1,500 on the 15th to pass the combine that had a profit target of $3,000. And you had to hit that profit target, and it had a max loss limit of $2,000. So basically, you have to make $3,000 trading in live markets before you lose $2,000. So what we're looking at here is this green candle here, market open. If you look at the bottom of the candle that I'm hovering over, you will see the information. It says Monday, October 14th, 2024 at 9:30 a.m. This is the 15-minute chart. I was on the 5-minute chart and the 1 minute. So what we'll do is we'll go back and we'll find those trades on the 5 minutes. So we'll highlight on the 5 so that we can go back and find it. All right, guys. So what we have is the 9:30 opening candle here, this green candle here. So what I did was I took a trade off of the initial balance high. So initial balance has a lot of different ways of forming. You can check out, I did a short on that, speaking about trade ideas and scalping ideas. So if you want to take a look at that, you can take a look at my shorts where I did a brief overview of some ideas of how to scalp the initial balance. There are multiple ways. But so right here, what we have is a 9:30 candle that opened up. So at the low of this candle is where I would place my first line. To let me know, okay, that's where we opened and that was the low as of now. Okay, initial balance forms within the first hour of trading. So I'll have 2 lines. Okay, so that's my low. I'll have another line for my high, and as price continues to move up, then I will adjust those levels all the way until the 1030 range. So wherever the lowest point is and the highest point between 9:30 and 10:30, that is where 2680. That is where my lines will be. And so that lets you know that's the initial balance. Okay, first hour of trading, that's the initial balance. I will link a book that speaks about initial balance in this video if you want to learn more, because there's a lot that goes into it, initial balance and, value area high, value area low from the previous trading day, acceptance of these areas, failed upside auction, failed downside auction, the auction theory process. That's all in a book called Mind Over Markets, where it discusses market profile, and I will link that book in the description. I will say, though, if you are a new trader, I don't know how much it would help you. I didn't read it until my 3rd year of trading. And, it's kind of like one of those things where they say when a student is ready, the teacher appears. That book appeared within the end of my 2nd year of trading, going into my 3rd year, which was this year, and I'm going on year 4. And when I read the book, it kind of put so many things into perspective for me. It just connected a lot of dots for me. And I don't think that if I would have read it in my beginning years of trading, I would have quite understood what was going on. Maybe it might have helped me, at some point in time. Obviously, it would have made sense, but I would have had to go back and read it for sure. So that's not to say if you're a beginner, don't get it, but it's just to let you know if you are a beginner and you do end up getting the book, keep, hold on to it. If it's a hard paper, if it's a hard cover, hold on to it. If it's an electronic cover, still hold on to it, or make sure you keep that account so you can have access to it. So again, this is Monday the 14th. What happened was price open. We had a nice opener range candle to the upside, and what it did is it traded up until 10 o'clock. At 10 o'clock, we established a high. Now, what I noticed was that we got to a high. This is where buyers were struggling. We sold off. So I'm alerted right here. I'm alerted to potentially get in for a short. Not only that, the RSI was overbought. So I'm alerted to get in to a short. I traded 2 contracts. I took this trade and I scalped somewhere within here. I think I scalped and made like $400 or something like that. Then I seen this bounce off of this moving average. When this candle started to flush it, I got in for another, just a quick scalp. Waited for this pullback. Once I seen that price wanted to continue to the downside, I got in for this scalp, and I was out before this candle could close or bounce, because I remember it bouncing, and I'm thinking, well, I made my money. Okay, it was 1,500 by here within a couple scalps. So that was the first day. But the key point was to wait for initial balance high to form and to catch that short off of initial balance high. It doesn't always happen like this. Price action could have gave us some kind of structure to let us know that we were actually going to go for a break of the initial balance high. So it all depends on the asset that you're trading and the personality of it, and it's up to you to stick with that and learn it, and so that you can understand how it behaves and how it trades. Just understanding the characteristics of the asset that you are trading. All right, so that was day one. I was done before 11 o'clock. So then what we have is day two, which was October 15th. So this is the next day of trading. Here is the 930 candle. Here is the that is the 930 candle low. Here's the 930 candle high. Just give me 1 second and I will get that together for you. So here is the 930 candle. What happened is we went up and we made a high at 2659.25. 2659.25. So that's currently at that time 930 open. At the 935 candle, we established a high. So what we have here is kind of a 15-minute, like the first 15-minute range. I waited this day because I realized there was a big wick to the upside and there's a big wick to the downside. Okay, we got sellers and buyers. We need to let price establish itself and pick a direction, if it is going to pick a direction. So we have the high established here. We have another big wick after that big wick, letting us know that sellers are in. This big wick after this big wick, letting us know buyers are in. So this is where other confluences come into play. We are trading sideways on the 5-minute. So once I'm seeing that we're kind of ranging here, right? We got the first 15 minutes. We are kind of ranging. We break out of the range. We come back into it. I look at the MACD, I look at the RSI, and I look at the moving averages, and they all tell me to sell. The MACD is bearish. The RSI is about to cross over the 50, which is neutral for me for what I have my RSI set at. And the moving averages cross. They cross at the same time as we get a big, heavy momentum candle to the downside. When I see that, what I'm thinking, and it doesn't always happen, but when wicks always get run, but they don't have to get ran like right now. You know, they can get ran later. It's just like people say gaps always get filled. It's not necessarily that they always get filled, because they don't, but usually they will get filled. Now, when that happens, when the fill happens, just depends on the market. But what I'm thinking is that we are going to run these wicks. And so I get in at the close of this candle for a quick flush to the downside. I'm trading 2 contracts. This day I took about 4 trades to make about 1,500. So somewhere in between this candle and this large candle here is where I took my scalps. And that is simply how I passed my combine in 2 days. But as you will realize, the 14th, when initial balance low was established, we traded all the way up until we established a high. Then we came down to potentially take out those lows. That doesn't always happen. So we could have traded up and then potentially until we reached a rejection point, and then we could have came back down and traded back into the range and did something like that and never went to test the lows. It just depends on the market. So it's not a cut and dry thing to where it's, oh, if we have a low and we break out to the upside, just wait until we reverse and take that trade all the way back down to flush those lows, because it doesn't always happen like that. You can take a quick scalp off the high. That's the idea, yes, but where would it go? How, how far will price retrace? Is it a reversal? Is it a pullback? That all depends on the price action prior to that. And that's why time comes in, watching whatever you're trading, learning the characteristics of that thing, as well as being able to have multiple confluences to let you know whether the trade is a good idea or not. As you can see here, we didn't trade to the upside or to the downside before flushing. We kind of stayed in the middle until we made a decision, and then we flushed. We could have stayed here all day. We could have literally ranged all day. Those are the boring days. But one thing about the market that you will realize is that we're either going up, down, or sideways. So if we're going sideways, we're just going to go sideways until we break to the upside or break to the downside. You just have to be patient enough to catch those trades. But I didn't want to make this video too long-winded. That is how I passed my combine in 2 days, taking trades based on the initial balance. I hope you find value out of this, and I will see you in the next one.